The UK is in the grip of a natural gas crunch that has triggered a sharp spike in prices, which is leaving millions of households grappling with these rising prices and businesses to consider decreasing their activity. And many think that Russia may be to blame for this upcoming energy crisis. So let's take a look at what is causing the crisis and why Russia may be to blame for continuing it. Electricity prices in the UK rose to 11 times above normal levels this week. This is a record, which is a high caused by a squeeze in the gas supply chain and the lack of wind to power turbines. And last week, the national grid was having to pay £4,000 per megawatt hour to secure backup electricity at short notice. In addition, Ofgem's recent decision to raise the energy price cap again by £39 has left 15 million people facing bill increases of the sort that haven't been paid in a decade. The UK has also cut its strategic gas storage to barely 1.7% of annual demand by closing the Rough facility off the Yorkshire coast. It has now subcontracted the costly task of storage to Germany and the Netherlands. And data from Gas Infrastructure Europe shows that the UK has less than 9 terawatt hours of storage compared to 75 in the Netherlands, which is a quarter of the population. And regardless, Dutch storage is very low for this time of the year at 52% of capacity, compared with 85% to 90% normally. For comparison, stocks are 113 terawatt hours in France, 148 in Germany, and 166 in Italy. And as we said, many think that Russia may be to blame for this precarious situation, to exert this massive leverage over Europe for its supply of natural gas. And on Friday night, more than 40 members of the European Parliament signed a letter which accused Gazprom, Russia's state-owned energy corporation, of deliberate market manipulation by ratcheting up gas prices to record levels. To this point, pipeline exports of natural gas from Gazprom to continental Europe have dropped roughly 1/5 in 2021 on pre-pandemic levels, despite a sharp rebound in demand and low stockpiles of this important fuel. This lack of supply has helped send prices in Europe to the highest levels since 2008, increasing energy costs for both homes and businesses. But why would Russia want to do this? Well, Russia may want to boost prices to such a level that Germany rushes through the approval of its politically controversial Nord Stream 2 pipeline. The Nord Stream 2 pipeline has divided European countries and also caused tensions between Germany and the US. The United States, Britain and Central European governments, including Poland and the Baltic states, lobbied Germany to ditch the project, which they see as a political project designed to make Europe more dependent on Russia's gas and increase leverage over Ukraine by cutting it out as a transit country. In fact, the pipeline which runs through the Baltic Sea to Germany also bypasses Ukraine. Ukraine is heavily reliant on gas transit fees from Russia to support its economy. And Russia has backed a proxy war in Ukraine's eastern territory since 2014, when Moscow annexed Crimea. In terms of arguments on both sides, Gazprom and its defenders say this is overblown. They point out that Gazprom has met all of its long-term supply contracts, no taps have been turned off, and some countries in Europe, including Germany, have been receiving higher supplies from Russia this year compared to the last. They argue that this is Russophobia to blame Gazprom for what is now becoming a worldwide issue, with gas prices in Asia also soaring. To this point, analysts have suggested that Gazprom's stance is not the only reason for rising gas prices. A cold winter has drained natural gas in storage in Europe to the lowest levels in 9 years, while demand from utilities to burn natural gas instead of coal has been boosted by soaring costs of EU carbon allowances to more than €50 a tonne. However, Gazprom's critics on the other side claim that it only takes small change in the balance between supply and demand in the commodity markets for prices to soar or sink. And the key part of this argument is that supplies to Northwest Europe from Russia have on average been lower this year than before the pandemic. Interestingly, Germany has been a long-term backer of the Nord Stream 2 project. It is set to approve the pipeline start this year after the Biden administration waived additional sanctions. However, the upcoming German elections could boost the Green Party, which has opposed the pipeline. And Angela Merkel tried to calm down any concerns by saying that Germany had agreed to impose sanctions on Russia if it tried to use Nord Stream 2 as a weapon. In terms of impact, Kwasi Kwarteng, the UK Business and Energy Secretary, is now meeting with energy suppliers in the UK, and it seems that the largest energy suppliers are asking the government for substantial support to get through this tough period. It seems that they could also ask for the creation of a bad bank to house customers that they could not take on without losing money. 5 small energy firms have already gone bust in the last 5 weeks, and this has often been caused by being unable to hedge against the rise in market prices, which has now left more than 500,000 customers in need of a new supplier. And industry sources expect another 4 may fold before the end of the month, which could leave a further 1 million customers stranded. And by the end of the winter, the industry may shrink to as few as 10 energy suppliers from about 70 at the start of the year. The cost of this energy squeeze is already threatening the economic recovery in the UK, just as the furlough scheme winds down and fiscal stimulus fades. It has already also forced the closure of 2 globally significant fertilizer plants in the UK, and this will lead to shortages in carbon dioxide. Carbon dioxide is a byproduct which is crucial to the meat processing industry and manufacture of fizzy drinks. The meat industry said the disruption to the supply of carbon dioxide had plunged the industry into chaos. It warned that carbon dioxide stocks would run out within 2 weeks, forcing the closure of some meat processing plants. The NHS also heavily relies on CO2 as it is used in a number of interventions, such as invasive surgery, and the steel industry could also suffer. The director of UK Steel said that prices had reached such extortionate levels that it was forcing a partial suspension of operations across the sector. This is undoubtedly a huge problem for the UK, its government and its economy, and we shall see how this situation will evolve over the next few weeks. What do you think is the biggest issue facing the UK due to this energy crisis, and what could the potential solutions for it be? Let us know in the comments, leave us a like and subscribe for more videos like this. Thank you again for watching, and we'll see you next time.